All right, let's do a quick exercise just on the components, the structure of budgeting. If I give you A, B, C, D, E, F, G, and ask you to list the preparation steps of all these budgets, which one do you think is the first one? Sales, and then inventory, purchases, cost of goods sold. So you can think of this because every time you make sales, you also have cost of goods sold entry listed. So F is the second one. Then what's next? Cash is a little bit later. So it's actually missing one, operating expenses here. Well, let's assume it does have operating expenses. What is after operating expenses? Budgeted income statement, right? So the entire operating budget at the end, our goal is to get to budgeted income statement, and that will be the whole set of operating budget. Operating budget links to all the temporary accounts. So we start from sales, then cost of goods sold, then the entire budgeted income statement. Then what's next? Not yet cash. Guess again. Capital expenditures. So what we covered in previous chapter is the horizontal line that you saw in the previous graph. So the vertical line basically is all the operating budgets, and then the left-hand side in the previous chart, capital expenditure budget, okay, on long-term assets purchase and payment. Okay, then we arrive at cash budgets, which is the first part of financial budget. That's also the first account you see on the balance sheet. After this, then we get to balance sheet budgeted, links to assets, liability, equity together. At the end, statement of cash flows. Okay, so this is the general flow. It's pretty much the same as the flow we do actual financial statements. But then again, this is the budgeted part, anticipated numbers. Okay, any questions so far? All right, let's take a look.